Let's resume our discussion. We have discussed till 12th case of RCM. Now we will discuss rest of it. Let's go ahead and then do that discussion. So 12th and 13th and 14th cases actually can be understood together. I'll tell you how they were initially inside one entry, one serial number, and then later was split it into two. So these two both basically talks about temporary transfer of copyright. So first one talks about music composer, photographer, artist, or the like, when they are temporarily doing transfer or permitting the use or enjoyment of copyright relating to original dramatic musical artistic work to a music company, producer, or the like located in taxable territory would be under RCA. A large number of music composers get royalty, right? These royalties are subject to taxes under reverse charge the music company would pay. Logical, right? One music company works with thousands of music composers. It's better collection when it is collected from the end of the music companies. If you look at they have used the word or the like. Here it means that it could be some other name, like, you don't have to really use the same name like artist. Sometimes actor could also be considered to be artist. So or the like actually denotes doing the same activity but different name also would broadly be covered under this entry. Then look at the 14th case. 14th case was talking about author, was earlier as one more item in the 13th case itself. Author is also doing temporary transfer or permitting the use or enjoyment of their copyright relating to original literary work to the publisher. It is the publisher who is liable to pay tax under reverse charge mechanism. Now, if you carefully analyze this, you will understand that one publisher would be working with 10,000s of authors, okay, a lot of authors. And primary reason why they work with a lot of authors is that an author, when they have an edition with the publisher, they will be getting royalty until, even if like say two books are being sold in a particular month, they'll still get royalty for the two books. So one publisher would work with all the authors so far they are they were working in the past with, like maybe lakhs of authors they'll be working with. So they wanted to create a system wherein the taxes can be collected from the publisher's end. That's the thought process. However, we know that there are a lot of authors who are doing multi-level activities. So authors also represented back to the GST Council and said, we would like to go for FCM. Number one, author can, if the author wants, they can actually opt for FCM like that we have seen in the likes of GTA. What is the process in which the author can actually go for an FCM? Now, first, author should go take a GST number, and they can choose to pay tax under FCM and start issuing invoice charging GST. Now, whenever they're giving an invoice to the publisher, they have to give a declaration to the publisher saying that they're actually opting for FCM, and they cannot withdraw the option within 1 year from the date of exercising the option. So you cannot be like 1 month in FCM, the other month in RCM. That kind of a structure is not allowed. 15th case is talking about RBI. So our summary should be like 2-3 sentences and we should be able to summarize this. Services provided by RBI and to RBI. Let's analyze that. Who will provide services? Sorry, what are the services provided by RBI? RBI will provide services to other banks, will provide service to government. RBI does audit services, giving licenses. All of these are services of RBI to banks. Would it be taxable? Yes. Under FCM or RCM? FCM only. What are the services? What are the services provided to RBI? It could be any number of, all the expenses of RBI are services provided to RBI, right? Say RBI building requires a painting, the painter would provide service. Then RBI requires a IT services from an IT company, and IT company will provide services. There are so many vendors empaneled with RBI. And chartered accountant could also be doing some kind of a special audit with RBI. So bill will be given to RBI. So all of them are services provided to RBI. Are they taxable? Yes. So now we can say services provided by RBI to RBI, both of them are taxable. There is one set of people who's providing services to RBI will be taxable under reverse charge. That is overseeing committee member of RBI. Today there is no overseeing committee meeting that happens, but in the past, when before insolvency bankruptcy code was very active, all the willful defaulters were reviewed by all these people called overseeing committee members. People like Vijay Mallya, who were considered to be willful defaulters, who had the money, never paid back all these giant loans. RBI had set up a committee to review that. Every time the committee sits, RBI will pay the committee members a sitting fees like the independent directors. RBI is supposed to pay taxes on the same under reverse charge mechanism. But today we don't have an overseeing committee. But they can still ask you questions. Huh? Then, lending of security by lender of security under security lending scheme of SEBI to borrower of security would be taxable under RCA. Now, security lending generally happens through the platform by SEBI. Electronic screen-based matching system is there. So there is an intermediary that will be involved, like a broker who does this particular transaction for you. If you have large number of stock with you, you can actually lend the stock and get a fixed charge. Now, security lending, I would like to clarify by analyzing all the related provision relating to securities under GST. So I'm just putting all of them into one net and then trying to discuss this. Look at the structure that we have here. If you look at supply chapter and club it up with the charge chapter, this is what the chart that you will get. Securities are first taught in the definition of goods, wherein goods are defined as every kind of mobile property. It includes actionable claims, includes growing crops which can be severed before supply, excludes money and securities. And service definition goes like anything other than money, security and goods are considered to be services. Here in both cases, securities are excluded from the definition. However, there's an explanation to the definition of service wherein they say facilitating transaction in securities are considered to be a supply of service. So what is not a supply then? Disposal of securities, buying and selling of securities. Like I sold securities that is there in my demat account to somebody. This activity was not considered to be a supply of goods, not considered to be supply of service. So it's not a supply, no GST is applicable. However, a stockbroker is facilitating the transaction in security. Like the stockbroker is helping you to transact in securities would be considered as a supply of service. Will that be subject to GST? Yes, stockbrokers brokerage plus GST is what is charged under FCM from the customers. Now, there is a third set of activity wherein they can lend the security through the government platform. The problem is that when you lend through the platform, you are the supplier, like you get a fixed fee from the borrower through the intermediary. But you know really who's the borrower? No, because it's a screen-based matching system. Borrower and lenders are matched automatically like markets. So you don't know whom to give the bill. So they said the tax can be actually paid by the recipient under reverse charge mechanism. So lending of securities are considered as supply of service as well, like a high net worth individual HNI lending stock for a charge. GST is applicable but will be under RCM. Borrower is liable to pay the GST. Borrowers are generally financial institutions, etc. to create all these special financial instrument that you would learn in AFM. Then look at the 17th case, which is talking about security services. Please understand, security services is a very it's a very tight definition that we have. Like say I'm giving CCTV to someone. Will that be considered to be a security service? The answer is no. Security service here means supply of security personnel. We know that all the buildings require security personnel, all the security bhaias that we have, all of these people who are running as a securities are not mostly in the payroll of the company. Generally they are hired through agencies because you require 24/7 security assistance for you. So all these security agencies who are supplying securities are not providing the they are not employees of the main company, right? They are providing the service of manpower supply. Like security service here means supply of security personnel. Now, what kind of an agency is it will depend upon whether it's taxable under FCM or RCM. To have RCM applicable, it's a conditional RCM. Supplier should be any person other than body corporate. What is the activity they're doing? Security services. To whom they're doing it? To a taxable person located in taxable territory other than government, local authority, governmental agency registered only for paying TDS, a person registered under section 10, that is composition levy scheme. So they're saying that the supplier who's the agency running, agency should not be a body corporate, could be an individual sole proprietor running an agency with 50 security personnel, partnership firm running an agency, HUF running an agency. But if it's a company who's running an agency, will be under FCM only. Now the recipient also has a condition. Recipient has to be registered, but recipient is registered only for TDS. It will be under FCM only. No, recipient has opted for compensation levy scheme, will be under FCM only. With me? Next is the last RCM for us to discuss in this segment is the renting of motor vehicle RCM discussion. But I don't want to just discuss RCM here and then just leave it for you to analyze in full. Instead, I wanted to give you an overall summary of renting of cars. Because if you look at your examination question in the main exam also, renting of motor vehicle where cost of fuel is included in consideration is represented multiple times in your exam. But it's a collective question that they ask. So I'm going to give you a collective charts wherein I'm going to discuss all the areas relating to that together. Let me tell you, this is going to be a very important chart. So if you're somebody who's watching recorded, I'll recommend you just pause the page and take the screenshot and then keep this summary chart with you. Okay. Or you should just ping me on the Telegram group that we have for CA Final, that you would find it on the description or on the comments. Join there and then ask me. I can give you even the PDFs of all the summaries. Okay. I can just give it to you free of cost too. There's no need to worry on that. You can download and then print or whatever you want to do, you can do that. Now, I'm saying that whenever you're analyzing renting of motor vehicle as a case, you need to look at 5 different structures together. I'm saying that there are 5 areas of discussion that you need to club and then learn this. First, we should know, what do you mean by renting? What do you mean by transportation? Are they both same under GST is the first question that we are trying to answer. Second, what is the rate of taxes applicable? What is the charge that is applicable? Third, is there any exemption available for renting? There are exemption for transportation, but is there any exemption available for renting? Yes, there are some exemption, that also we will discuss. Fourth one, if you look at renting of motor vehicle upon purchases, there are some block to credit concept available. Similarly, renting of such motor vehicle is also blocked under GST. So you need to club this with block to credit concept. Then to decide upon when to pay the tax under RCM, there is every RCM that we discussed so far will have to be analyzed together with the discussion of time of supply as well. 13 subsection 3 could also be applicable, even not just 13 subsection 3. If it is goods, it would be covered under 12 subsection 3. All these 5 discussions are to be read together. If you are confident in all these 5 areas, that's when you will be able to 100% give an answer in the examination. Shall we do this? Shall we learn all the 5 areas relating to renting? Can I have a quick yes on the chat box? Okay, let's go ahead and then do this. First, what is the concept of renting and what is the concept of transportation? Are they both considered to be same? Is renting same as transportation? The answer is absolutely no. Renting is different from transportation. As the clarification goes, there's a clarificatory circular which says that, say, to give you a simpler example, I take an Uber from my home to the airport. I book an Uber. Is Uber providing me transportation of passengers or Uber providing me the service by way of renting of motor vehicle? To get an clarity on the same, what kind of a service is Uber providing me? Now the Uber is providing me transportation because my activity has a prefixed route. There is a prefixed schedule. So if I'm going from point A to point B, that will be transportation. Now you have an option. Once I landed, say I was going into airport and then I landed Chennai. My plan is that in 3 days I wanted to run around in places nearby to Chennai and Pondicherry. So I booked something called as Uber rental. And I booked an Uber taxi for 72 hours. Okay, for 3 days I booked an Uber taxi. Suppose the same taxi which would have picked me up from my home to airport could have come for the same services of 3 days, taxi rental. Is that activity considered to be transportation of passengers or renting of motor vehicle? It will be considered to be renting of motor vehicle. But if you carefully go and then look at it, looks the same, right? Renting looks exactly the same as transportation. However, in the second case, when I'm booking 72 hours Uber, I'm basically having no predetermined schedule, predetermined route. My focus is on the vehicle here. I could use the vehicle as I like. This is primarily the differentiation between renting and transportation. And all the discussion that we are having under reverse charge is only for renting of motor vehicle, not for transportation. Are you guys with me? The same can be applicable for passenger vehicle, same can be applicable for goods transportation vehicle. So when you're analyzing whether the activity is transportation versus renting, you look at if there is a predetermined route and schedule, then it is transportation. If not, it is renting. And GST provisions are completely different for both of them. You guys understanding this? Is that first one I can tick and say that, okay, that is understood. Second, what is the rate of taxes and what kind of a charge is applicable when I'm doing the service of renting of motor vehicle? Look at this. Renting of motor vehicle is actually covered under reverse charge in certain cases. What is that case we will look at? First of all, the service is defined. The RCM defines a service to be renting of motor vehicle where cost of fuel is included in the consideration. See, I could rent the car and then ask them, you only pay for the fuel, or I can rent the car with a driver and with fuel all included in the consideration I charge, which is discussed here. Only renting of motor vehicle. What kind of vehicle? Designed to carry passenger. I'm covering this reverse charge entry covers only vehicles like car, tempo traveler, or vehicles which are actually designed to carry passengers, all your SUVs and everything, all those which are designed to carry passengers. These are not covering renting of a truck, because those are designed to carry goods. So I'm talking about renting of motor vehicle where your activity includes cost of fuel, also your consideration includes cost of fuel and designed to carry passengers. So what passenger vehicle you're renting, and your petrol money is also included in the money that you charge from the customer. If you're into that business and you're renting, you're not doing transportation, you have two rates option available under GST. Number one, you can opt for 12%. If you go for 12%, you're eligible for full ITC on your inward supply. So you buy this particular vehicle, or you basically have a corporate office that you're running. All those inward supplies, wherever you paid GST, you will be able to take the input tax credit if you're under 12% bracket. However, if you are not opting for 12%, then primarily your tax rate would be at 5%. Right? If you're not somebody who's gone for 12% GST rate, you are under 5%. If you are somebody who's at 5%, you will not be able to take all the credit. You will have restriction on the input tax credit. Right? You will not be able to go and take the full entire credit. When I say restriction on input tax credit, it doesn't mean 100% no credit. It says that only one credit I will allow from the same line of business. Say I'm into renting of cars. Say I have 10 Swift cars. I rent this 10 Swift cars to Infosys to transport their, to transport their employees or whatever. So they have said like every day 5 hours they want, a Swift car. So I've given 10 of them to them. Next question is, I did not go for 12%. I will be under 5%. So I will not be able to take ITC on my inward supply. I can take ITC only on one inward supply. That is, out of this 10 cars, say one car is breakdown. So I decided to rent another car. That fellow who rented me the car would have charged me either 12% or 5%. That I can take input tax credit. So on same line of business is the only ITC I get. Say I'm running corporate, I'm running a corporate office where I'm paying rent, and then rent has a GST of 12,000 rupees. If I'm at 5%, will I be able to take the input tax credit of the same? The answer is absolutely no. Next question. So this is just a discussion of rate. It could be 12% or it could be 5%. It doesn't mean the charge is being explained here. One thing I can tell you, if you are at 12% and you take full ITC, you will be always under FCM. Which means if you're into renting of motor vehicle business and you are at 12%, you charge this 12% from customer. That's when you can take full input tax credit. But if you are under 5% with restricted credit, sometimes you will be under FCM, sometimes you will be under RCM. To have RCM applicable, there is further condition to be satisfied. What is the further condition? Number one, supplier category. They said the supplier should not be a body corporate. Supplier should not be a body corporate. And the recipient should be a body corporate. This is the condition they fixed it. So the one who is having these cars and renting these cars, they should not be a company or an LLP. If they are a body corporate and they are renting this car, it will be under FCM and it will be at 5% because they have already opted the rate. So you go for rate, then charge. But if you are not a body corporate, then I have to ask again the question, is your customer also not a body corporate? I'm an individual who has cars. I have given these cars on rent to another individual. I will pay under FCM 5%, no doubt. But I'm not a body corporate. I'm an individual who's renting the car, but I'm renting the car to Infosys. The recipient happened to be a body corporate. Then it will be the body corporate who will pay tax under RCM 5%. Are you guys understanding this chart? Now, let us move to exemption. So we've learned, first we have learned what is concept of renting versus transportation. Then we have looked at what is the rate, what is the charge. Now third one, we are looking at exemption. Is there any exemption available for renting? Yes. In GST, some renting of vehicle are also exempted. Now the exemption, if you look at the first three vehicles when you rent, the exemption is available are passenger vehicles. The last one is goods transport vehicle, right? Now let's analyze this. So they can club this also with you, right? So whenever you think about RCM, first it should be taxable. Some cases it will be exempted here. Okay, that's what I'm talking about here. Motor vehicle for more than 12 passengers given to state transport undertaking would be exempted. Say more than 12 passenger vehicle means what? Maybe a tempo traveler, maybe a bus that you're 52-seater bus you have given on rent to state transport undertaking like KSRTC, TNSTC. When I say motor vehicle for more than 12 passenger, it could be any fuel type here. EV, petrol, diesel, CNG, any fuel type if you give it on rent, that rent you collect from KSRTC or TNSTC would be exempt. Second, an electrically operated vehicle. It's an EV that you have given on rent and it is for transportation of more than 12 passengers. Here, in both of these cases, if you look at, if you're renting a 5-seater, if you're renting an 8-seater, it would be taxable. But in local authority, if you're giving it to rent, the fuel type is also defined. What kind of a vehicle? Electrically operated vehicle it has to be. Then only you'll get the exemption. Third one, you're giving a vehicle to someone. Here they did not define vehicle, any vehicle you can give. Auto rickshaw, tempo traveler, car or vans or bus, anything. To whom you are giving this? To a person who's providing transportation, point A to point B. To whom? To preschool till higher secondary. What kind of transportation? Transportation of three people, student, staff, faculty. There is an exemption that is available in the exemption entry that you would have already looked at, which says that if you are doing transportation of students, staff, faculty to preschool till higher secondary, it is exempt, right? Transportation of students, staff, faculty to preschool till higher secondary is exempt. That services, if it is provided by, any third party to preschool till higher secondary is exempt. Now somebody is renting vehicle to this fellow who's providing transportation services to preschool till higher secondary. That renting is also exempt. That's the point here. Fourth one, if you're giving a goods transport vehicle to a GTA, whatever, say your GTA, Agarwal GTA has taken a truck on rent, that rent will be exempted from GST. Are you guys understanding the third point? Now look at the fourth point that we have, which is concept of blocked credit. This is section 17.5b. But we will first look at quickly what is 17.5a was about. Then we'll look at B because that is connected provision that we have. 17.5 talks about blocked credit. In that 17.5b says renting, leasing, hiring of motor vehicle, vessel, aircraft for which ITC is not available on purchase will be a blocked credit, which means if you look at 17.5a, we will know that if you are purchasing a passenger vehicle, approved seating capacity is less than or equal to 13% including driver. If you purchase that, if you purchase a car, you can take credit. If you purchase a vessel, you can take credit. If you purchase an aircraft, you can take credit. These vehicle, if you get it on renting, leasing, hiring, that also is not eligible as input tax credit, right? So 17.5b blocks the renting of it. Normally, we have learned in the previous session that I've taught you that if you are somebody who's actually having, if you are somebody who's actually taking an inward supply and you're paying tax under reverse charge mechanism, whatever taxes that you pay under reverse charge mechanism needs to be paid by cash. After you pay that by cash, I have told you that you can take input tax credit on the same, right? Here I'm saying that because it is blocked, even if you pay tax under RCM on renting, you will not be able to take any input tax credit on the same. However, there could be some motor vehicle, vessel or aircraft for which ITC could be allowed. Like say for example, goods transport vehicle, if you purchase, you can take ITC. Those vehicle, if you take it on rent and you pay GST, you can take input tax credit. Likewise, if there are exceptions, like I'm running a taxi business or I'm a driving school and I've purchased this particular vehicle. Can I take input tax credit? Yes. Those vehicles, if I've taken on lease, will I be able to take input tax credit? Yes, I can take input tax credit on renting. So that's what I've written as note. Motor vehicle, vessel or aircraft for which ITC is allowed on purchase, like a goods transport vehicle, passenger vehicle with more than 13 seater are eligible for ITC when it is leased or rented or hired. The last point to learn is time of supply. What is the time of supply for recipient of service? Now, this is an amended provision that we have. Okay. So, I'm going to teach you the entire provision relating to time of supply for RCM cases. Let's go and look at it. First, we need to have an idea about the documents that we need to look at. Then we can look at the say we have learned what are the cases where recipient will have to pay taxes, right? Now, when should this recipient pay taxes? That's the next question we are trying to answer here. I have a chart in which I have elaborated this concept. With effect from 1st of November 2024, there's a amended provision that has been introduced and effective under time of supply for RCM cases. So, we will club this and then try to understand the entire concept. Shall we look at it? Okay, this is the chart that I want you to remember for your exam. Time of supply under RCM for recipient. The inward supply. So, first let's look at the documentation under RCM. Okay, let's assume there is an inward supply under RCM for recipient. How many documents are to be issued if the inward supply is under RCM? There are two documents that needs to be issued for inward supply that are under a reverse charge mechanism. First document is something called as a invoice. When the supply is under RCM, who will issue the invoice is the first question I have. It depends upon whether the supplier is registered or unregistered. We have learned that in 9 subsection 3 and 9 subsection 4, the primary difference is that in 9.3 the supplier can be registered or unregistered. Still, recipient is liable to pay the taxes. In 9.4, the supplier would always be unregistered. So, primarily, if the supplier is unregistered, tax invoice will be issued by recipient itself. We call this as invoice under 31 subsection 3 clause F. We call this as invoice under RCM. There is also at times we call this as self-invoicing. On my inward supply, I pay tax under RCM, but the supplier is unregistered. So, I need a document to take input tax credit. So, that document will be issued by me. There's a rule 47A. So, 31(3)F says that it needs to be issued within prescribed time. Now, that prescribed time came through rule 47A, which says that if you're a recipient, and this is applicable for supply of goods under RCM or supply of service under RCM. If you are a recipient and then your supplier is unregistered, but you have to pay tax under RCM, you have to issue this invoice under 31(3)F within 30 days of receipt of supply. After you receive goods, within 30 days, you will have to issue this invoice under RCM. Or if you are receiving service, within receipt of this service, within 30 days, you are supposed to issue invoice for both goods and service, right? Apart from this, there is a second document. So, this document will have GST amount also specified. That's a GST that you're trying to take credit after paying the taxes. However, if it is payment voucher, What is a payment voucher? Whenever you are paying consideration to the supplier, see, you are paying GST by yourself to the government directly, but you have to pay the consideration to the supplier, no? Say if you are receiving inward supply for 1 lakh and GST is 18%, you pay this 18,000 rupees to government directly. Okay, you prepare a self invoice if the supplier is unregistered. However, when you pay this 1 lakh rupees to the supplier, you will have to issue a document called payment voucher. So, two documents. What if the supplier is registered? What if the supplier only has registration for paying TDS? Will he be considered to be a registered person? No, he's still considered to be unregistered person only. There's an explanation to 31.3. Unregistered person includes a supplier registered only for TDS under section 51. If the supplier is a registered supplier, then there are two documents to issue here again. But supplier is registered, so supplier will issue an invoice. In that invoice, there will be a place where they will mention, is the tax to be paid under RCM? They will mention yes. So GST and all will be there. So if the supplier is registered and it is still taxable under RCM, it's supplier who still issue the invoice. Then who will issue the payment voucher? The recipient will issue the payment voucher. It will have only the value because that's what is paid to the supplier. In both of these two cases, time of supply provisions slightly differ. What is the time of supply provision used to say? For recipient, time of supply. So there are, for goods and services, we have different provision here. Say for goods, time of supply for recipient of goods is determined under section 12 subsection 3. How did I get 12 subsection 3? All time of supply provision for supply of goods is covered under 12. All services will be covered under 13. Forward charges under subsection 2, reverse charges under subsection 3. Right? So in case of recipient of goods, there are three dates I'll compare: date of payment, 31st day from date of invoice, and date of receipt of goods. Whichever is the earliest, that will be the time of supply for the recipient. Next month 20th would be the due date to deposit tax under RCA. What do you mean by date of payment? Date at which I paid the money to the supplier. I'm a recipient here. If the supplier has given me an invoice 31st day from the date of invoice, but if supplier has already given me the goods before that, date of receipt of goods, whichever is earliest. However, if the supplier is unregistered, what date will not be there? 31st day from date of invoice will not be there. Even if I take that, I have to take what invoice? Recipient's invoice, no? Self invoice. When will I issue self invoice? I will issue self invoice when? I will issue within 30 days from the date of receipt of goods. So what will be the earliest date here? Date of receipt of goods. I'll have to compare date of receipt 30 days from date of receipt doesn't make any sense. So they said date of payment, date of receipt of goods would be the ideal pick when the supplier is unregistered. When the supplier is registered and it's under RCM, date of payment, 31st day from date of invoice, and date of receipt of goods. However, if it is a recipient of service, what is the provision? There is no date of receipt of service as a date that was given in the time of supply provision. Therefore, they have now made an amendment and said, if the recipient is liable to pay tax under RCM for supply of service, that all cases that we have seen under notification 13/2017, time of supply for recipient would be date of payment or 61st day from date of invoice. Only when the invoice is issued by the supplier. When the invoice is issued by the recipient, self invoice, we should consider self invoice date and date of receipt of payment. Sorry, date of payment, because you're a recipient, so you're making payment. Date of payment compared with date of invoice under RCM. These are the two dates that we'll compare. This is what I've summarized into this chart that we can look at. This is a chart that you keep a mental memory for you to analyze. What is the time of supply for recipient? If the supplier is unregistered, for recipient of goods, it will be date of payment, date of receipt of goods. 31st day from date of invoice is irrelevant. But if it is a recipient of service and the supplier is unregistered, it will be date of payment and date of issue of invoice by recipient, that 31(3)F invoice. If the supplier is registered, then for goods, three dates: date of payment, 31st day from date of invoice, and date of receipt of goods. If the supplier is registered and it is supply of service under RCM, then we would compare date of payment and 61st day from date of invoice by the supplier. This is the provision we have. With all of this, let us try to answer a question. Let's try to analyze exemption first. If you get these questions correct, then it means that you've learned this entirely full. ABC Rental Private Limited has provided 5 Swift cars to TNSTC for 1,50,000 rent per month. Taxable or exempt? Taxable, because to get exemption, it has to be a motor vehicle for more than 12 passengers. This is Swift cars, 5-seater. Number 2, XYZ Rental Private Limited has given 45-seater diesel bus to KSRTC for 1,50,000 per month. Would it be taxable or exempt? They have given 45-seater, more than 12-seater to KSRTC, state transport undertaking. Would be taxable or exempt? It would be exempt. Third, ABC Rental Private Limited has provided 42-seater automatic petrol bus on hire to Cochin Corporation for 1,20,000 per month. Would be taxable or exempt? Would be taxable. Why? Because it is a petrol bus, it has to be an EV. XYZ Rental Private Limited has given Tata Punch EV car to Chennai Corporation for a monthly rental of 50,000. Taxable or exempt? It would be taxable. Why it is taxable? It is Punch EV car. It has to be more than 12 passengers. Fifth case, ABC Rental Private Limited has provided 42-seater, more than 12-seater bus to Agarwal GTA for rent. Would it be taxable or exempt? Taxable. Agarwal GTA would get exemption if they are renting what? A goods transport vehicle. Sixth case, XYZ has provided 30-seater EV, more than 12-seater electric vehicle to Bangalore Corporation for 30,000 per week rental. Taxable or exempt? Exempt. Electric vehicle, more than 12 passenger to local authority. Mr. Raju is providing transportation of students from their houses for Don Bosco Public School for 2 lakh. Gopal has given his tempo traveler to Raju for the same for rental of 50,000. Both rental would be exempt. One, transportation would be exempt. Second, rental would be exempt. This is a very important example. This is being tested as a adjustment in multiple compulsory questions for you. Infosys, being the recipient, is a body corporate, has taken car on rent from Mr. Raju. It's a 5-seater car. Raju did not opt for 12%. Raju is an individual who's running the business of renting of motor vehicle. And the rent charged is 1 lakh. Invoice was given by Raju on 1st of January 2024. The payment was made on 15 January 2024. Question number 1, who is liable to pay GST? Rate is 5% because he did not go for 12%. Then I ask the question, is a supplier body corporate? No, other than body corporate. It's a recipient body corporate? Yes. So this would be under RCM. Infosys will have to pay on 1 lakh 5%, 5,000. Number 2, what is the time of supply for Infosys? It is section 13 because it's service, it's under subsection 3, it's under RCM. Then the next question, is the supplier registered or unregistered? In this question, where is nothing mentioned and they said invoice is issued, we will assume the invoice is issued by supplier and supplier is registered. So if supplier is registered, I should consider for 13.3 date of payment and 61st day from date of invoice. When was the date of invoice? Invoice is given on 1st Jan. Jan has 30 days, Feb has 28 days, March 3 more days, makes it 3rd March as the 61st day. Here, when did the payment made? 3rd March, 15th January payment made, which is earlier date. 15th January would be the time of supply. 20th of February needs to be the date in which they have to deposit this 5,000 to the government. After depositing this, can Infosys take the input tax credit of this 5,000 is the third question that I'm asking here. The answer is no, because renting of motor vehicle otherwise on purchases is blocked under 17.5b will be a blocked credit that we have. Are you guys understanding this? Is the structural understanding of this provision clear to you? Are you able to connect all the 5 things when you're recapping next time? Try to recap all these 5 things together with all the related provision for you. Is this combined discussion helpful to you? Okay. There is 9 subsection 4 that we have. What is 9 subsection 4? 9 subsection 4 is talking about RCM for inward supply from unregistered supplier. It's an amended provision that we are trying to learn here. This provision was initially discussed as a general RCM, and then government had to withdraw this provision because it made no sense at all. Now the provision looks like this. If there is an unregistered supplier, they are supplying notified category of goods or service to notified class of registered recipient. This recipient will have to pay tax under RCM. So, are all unregistered purchases taxed under RCM now? No. So, I have written an exam note here. Other than notified cases, if a registered supplier receives goods or services from an unregistered supplier, GST is not applicable. So, all your unregistered purchases are not under RCM now. This provision was initially given an exemption with 1000 rupees, 5000 rupees. Now they remove the whole provision, and then the provision is only applicable in notified case. There's only one industry notification we have under 9 subsection 4. When will somebody be liable to pay tax under RCM? They said a person will be liable to pay tax under RCM under 9(4) in one industry, which is real estate residential projects. RRP projects, real estate residential projects, we call it as RRPs. Now, with effect from 1st April 2019, all these real estate residential projects have a rate reduction. What is the rate reduction? They said if your houses are affordable houses, that means you're in metros less than 60 square meter, in non-metro less than 90 square meter, with a value cap of 45 lakhs, your rate would be 1% without ITC. Houses other than affordable houses and commercial apartments inside residential projects with carpet area less than or equal to 15% of total carpet area, the tax rate is 5% without ITC. So both of these are not applicable for the exam, just the rate is just for your understanding purpose only. If you look at when will you pay GST on purchase of apartments or residential projects? You will have to analyze it with Schedule 3. Schedule 3 says that you will pay GST on purchase of apartments if you purchase the apartment before it has obtained completion certificate. So you'll have to pay GST on that. So all those apartments which are not or yet registered with the local authority, completion certificate you get it from local authority, right? Or we can call it as building number. All those apartments where building numbers have not yet been obtained, those apartments are subject to GST when you purchase. Now, those apartment projects, DLF Group, Tata Group, or all these construction companies, Skylines, SFS, all of these companies, or your Prestige, Puravangara Group, so many True Value Homes, so many groups are there, right? Casa Grande. All these groups, when they are selling their inventories, the apartments, before obtaining completion certificate, they will charge from you a GST of 1% or 5%. Both ways you don't have any ITC. Who has no ITC? The real estate companies do not have. The promoter, we call it, they do not have any ITC. What they basically do, they purchase cement, steel, and they pay huge GST on the same, no credit on that. So what these people will try to do when there is no input tax credit to reduce their cost of purchases, they'll start purchasing from unregistered person. To curtail this, and when the government has reduced the tax rate from 18% or 12% to 1 and 5, government wants to ensure that there is no input tax credit, means there is so much of ITC that converted into revenue for the government. People will try to bypass this by making unregistered purchases. So to avoid this, they put a condition. This is mandatory for all the real estate residential projects. They said your purchases 80% has to be from registered persons. So if the total purchase of a real estate residential project, like say there's a new project coming in and total purchase is 100 crore, 80 crore purchase has to be from registered person. Suppose they made only 70 crore purchase from registered person, 30 crore purchases from unregistered person. What they have to do on the 10 crores of gap. So out of 100 crores, 70 crore only from registered. It should have been 80%, which is 80 crore. 10 crore gap, they will pay tax under RCM. And they will not be able to take any credit. So it will be as if they paid on 80%. That's the point. So this is any shortfall from 80%, they will pay tax under RCM under 9 subsection 4. Apart from this, there are two more RCM introduced under 9(4), which is if you purchase from an unregistered person cement, because cement was taxed at, okay, so for your exam, cement is still, for Jan exam, cement is still taxed at 28%, but now that cement is having a tax rate reduction. Now, cement is it if it is the one that is purchased from unregistered person, irrespective of 80% or other, all unregistered cement purchase, you pay tax under RCM at 28%. But other than cement, if you have, after cement you pay tax under RCM, you recalculate your RCM computation, and then if you still find that you have a shortfall, you pay tax at 18% on the RCM. Even capital goods purchases, you will have to pay tax under reverse charge mechanism. I can probably show you a computation so that you get this understanding clear in your head. Look at the example that I've drafted for you. They have not asked question as such, but they can ask because it's there in your books. Say DLF is a promoter having following inward supply: cement, steel, labor, other materials, fuel, TDR, electricity. You do not include fuel, TDR, electricity in your computation. Primarily, electricity has no GST, TDR is exempt, fuel also has no GST. On those purchases where GST is applicable, on that only we'll apply 80%. Cement, steel, labor, okay, other material. You look at, there is 30 crore, 10 crore, 20 crore, 6 crore from registered. The same purchases 20 crore, 2 crore, 10 crore and 8 crore are from unregistered. You are supposed to compute GST payable under RCM under 9(4) by DLF on inward supply of real estate residential project. So first you will have to look at how much is the total purchases excluding fuel, TDR and electricity. 30 plus 10 plus 20 is 66 from registered, 20 plus 2, 22, 32, 40. So 106 crore is your total purchases, right? Out of that, first you look at how much out of 106, 66 was from registered. But you first look at, is there any unregistered cement purchases? Of course, you have 20 crore unregistered cement purchases. You will pay, so 116, no? So which means it is 66 plus 50, 60, 66, 30, okay, 30 plus, okay, so there is another 10 that they have added, fuel and all that. So apart from fuel, TDR, electricity, so the net would be 106, correct only. Out of 106, how much is your registered purchase? Only 66. How much should have been? 80%. That is 84.80. 80% on 106. Now what happens? You first look at, is there a cement from an unregistered person? Then you cannot have any 80% computation there. Every unregistered cement purchase has to be paid tax under reverse charge. So 20 crore you pay tax under reverse charge outrightly. If you pay 20 crore under reverse charge and do not take credit at 28% now cement, after that you recompute your tax paid purchases, 66 plus now 20, that makes it what? 86, right? So your shortfall is 20 crore, that makes it, so that makes it 86 already covered under registered purchases or tax paid purchases. So how much should have been? 84.8. Should I again pay tax under RCM? No, you've already crossed 80%. So if cement is already paying taxes under RCM, makes you above 80%, then there is nothing further you need to pay. Okay. Total inward supply after cement is 86 crores. So on cement 20 crore you paid 28%, 5.6 crores under 9(4). Done. There is no further shortfall. Suppose in the above question, cement unregistered was only 10 crore, steel unregistered was 12, right? Which means that cement, if you pay 10 crore, you will make it only 66 to 76. You still have a shortfall, so you'll have to pay tax under RCM again under 9(4). So look at, pay first 28% on the cement unregistered, that is 10 crore, that is 2.8 crore. After cement, total purchases GST paid plus RCM would be 76. What should have been 80%? It is 84.80. That 84.80 minus 76 makes it 8.8%, 8.8 crores again under RCM. You have to pay 18%, 1.58. So total RCM would have been 2.8 plus 1.58, that is 4.38. After paying this, can you take input tax credit? No, because the real estate residential project has no ITC at all now. Are you guys understanding this thought process under 9(4)? So we have finished the entire discussion on charge chapter, balance. So your discussion on 9(3) and 9(4) exemption, clubbing, everything is over. You guys with me? Okay. So we'll close with this for today. We will continue our discussion tomorrow and onwards, right? So stay tuned. We will finish the rest of the revision in the next session.